So welcome back to our series here, everything you always wanted to know about silver, but we're afraid to ask, with our special guest and gold expert, precious metals expert, Dana Samuelson. Now we're going to dig into why the topic of precious metals and its relationship to fiat currency and what all that means, why it matters so much right now. Dana, in our last segment, you talked a little bit about that. Why don't you go ahead and expand on that a little bit?
Well, gold and silver were money in the world for 2,000 years, and that no one had to trust what the money contained because it was universally accepted as a store of value. When we went off the physical gold standard in 1933 and took the gold out of the currency, the US was the world's reserve currency for the next 40 years because our currency was backed by gold. Then we took the gold out of we quit backing the dollar with gold in 1971. So we're in fiat currency right now. So it's full faith and credit of the United States. But what we've seen over the last 40 years, 50 years, is just our debt has exploded. The amount of currency we've created out of thin air is enormous now. It's off the charts. Now, we've gone through a couple of bouts of this over the last 40 or 50 years, but in the 21st century, we had a big bout after the financial crisis of 2009 where money printing our debt went from 1 trillion to 4 trillion. Now we're going through a whole nother phase of this where you keep creating more and more of the same thing, you're going to dilute the value. If you vice versa that, precious metals are going to keep buying more and more dollars because it's going to take more and more dollars to buy gold and silver. So gold and silver hold their purchasing power. They remain, gold is the currency of last resort in the world, which is why central bankers are buying it at record rates right now as well. And silver is the same thing. It's a currency. It's money. It's real value.
Yeah. So let me kind of comment on that a little bit because it took me a while to get my mind around it. And part of the problem, if you're watching this and you denominate your life and your earnings and your debt and your net worth, and you think about life in terms of your financials, about trying to acquire dollars, then you run the risk of thinking you're rich when in fact you're broke. And you don't really realize that, right? I mean, there are people in Zimbabwe that are trillionaires and can't buy a roll of toilet paper. There are people in Venezuela that have millions of bolivars and can't buy any food to eat. So currency can completely fail. And it's hard for Americans to consider that because, as Dana mentioned, we have been the reserve currency of the world. Everybody in the world wants our money, wants our currency, and they bid on it, meaning there's demand. So it's a currency like any other commodity, if you will, is based or priced on supply versus demand. And the key to keeping the price up is there always has to be a bid. There always has to be somebody that wants it. Governments create the requirement for their currency to be used by having taxes. You might wonder, how come we have such high taxes when we can seem to print as much money as we need? Well, the reason we have taxes is because it forces you as a worker to get up every day and earn dollars so you can pay those taxes. It creates demand. The ability to print all that currency only works when there's somebody on the other end of the trade to take it. And so you have to have demand. Another way to do it is to loan people in other parts of the world in dollars. So if the United States government loans money to foreign governments, they have to earn dollars. They have to trade the fruit of their labor, their production, to earn dollars in order to pay the interest back on their loans, or they risk losing the collateral, which could be a major piece of their infrastructure. China got smart, and they're playing that same game now too. So there's a tug of war, which I went into detail on. In the Real Asset Investing Report, we kind of detail it up to about 2013. In the Future of Money and Wealth, the Dollar Under Attack video, again, links below, we go into greater detail all the way up through 2018. And if you end up getting the Real Asset Investing Report and getting on that list, then as I update that from time to time, I'll send you additional information. But there's a tug of war right now in the world with major governments, most notably China and probably Russia right there with them, that are working day and night diligently and have been for at least the last 12 years that I've been tracking to replace the dollar as the world's reserve currency. That's going on. So that's one factor. Dana, do you have anything you want to say about that before I move on to the second factor?
Well, having the world's reserve currency in the United States insulates us from currency shocks that other countries have gone through when their economies are weak or strong. The dollar is the universe around which all the other currencies revolve. And most Americans don't understand or appreciate fully the benefits we get from that. So when we have commodity prices like oil or precious metals go up and down, they're priced in dollars. So we have a constant, which is dollars to us, but other currencies go up and down relative to the dollar. So there's a double shock there. If you don't have the world's reserve currency, if the dollar loses that status, then we're going to be subject to much more inflationary pressures or commodity price fluctuations than we've ever been before.
Yeah. So let me jump in and give people another way to look at it, because again, it's taken me a while to wrestle with these concepts and get to understand them, but it's really, really important you understand. And you may or may not have experience in this as you're listening to this either, but you've probably heard of the Standard & Poor's index, right? There's a collection of stocks that are part of the S&P 500. It's a basket of stocks. And if you're running a big mutual fund and you are mirroring the index, and so what you do is when something is added to the S&P index, you buy it. You must buy it because it's part of your fund. The reverse of that is that if a stock gets dumped out of the S&P index, then everybody who's holding it, because it's in the S&P index, will sell it. Well, you don't have to be a rocket scientist to figure out when a company that wasn't in the S&P got put into the S&P, there's a bid on it because all the money managers are buying it to put it into their portfolios to conform their portfolio with the S&P list. Well, the reverse is true. When the stock gets removed from the S&P list, all the people who are holding it dump it and the price collapses. People who pay attention to that can try to front run or use options and futures. And we're not suggesting you do any of those things. I'm not a stock trader. I just want you to understand the same thing is true. If in fact, Russia and China and everybody else that is interested in de-dollarizing the world, and it's a long list of people, by the way, if that happens, then all the people who are holding the dollar only because it's the world's reserve currency will sell it. And when they sell their dollars, the value, the price, the purchasing power of the dollar falls. And it's hard for Americans to understand what that means because they think that, a dollar is a dollar is a dollar. It's, to your point, the center of the universe, but it's not. We used to think that the Earth was the center of the galaxy and the solar system and everything revolved around the Earth. But then as they started charting the stars, they realized that the data didn't fit the facts or their experience, their observation didn't fit their perception, because they would notice that sometimes the stars would move in one direction, other times they'd move in a different direction. And it turned out to be, of course, when they got better at the math and the geometry, of which I'm completely not qualified, they realized that it was, in fact, the Earth was revolving around the sun. And then later they discovered that the sun was revolving in this bigger thing called the Milky Way. And of course, that's a whole different discussion, but it was a major paradigm shift. And the point of this and why this matters now is that for the vast majority of the history of the entire world, gold and silver have been money, universally accepted money. Anywhere you go, from country to country to country, people would take gold and accept gold in trade for the production of their labor. It could be their produce, the fruit of their land, their livestock, whatever they made, whether they were a cobbler or a coat maker, it didn't matter. They would accept it, and it became the medium of exchange, but it also was money because it retained its value over time. So if you're not familiar with those concepts, we had G. Edward Griffin, who wrote the book called The Creature from Jekyll Island, which is a book you should totally read if you want to understand money and the Federal Reserve and where all this money comes from and how they got the ability to print unlimited amounts of money. But he did an epic talk called What is Money at our Future of Money and Wealth conference. Again, link below. You can watch that, but you need to understand that. So what happened is that in 1933, we kind of took all the gold from the American people and consolidated it into Fort Knox, but we continued to allow the rest of the world to trade their dollars in for gold. But what happened is we started printing too many dollars. We started running out of gold. We went from 20,000 tons of gold in our savings account in Fort Knox down to 8,000. And then in August 15th, 1971, President Richard Nixon shocked the world. It's literally called the Nixon Shock. And he told the world, hey, remember we promised that you could turn your dollars in for gold? Well, there's a new sheriff in town and we've changed the deal. Kind of like when Darth Vader told Lando Calrissian, I am altering the deal. Pray I don't alter it further, because, we were the big army. We were the big dog. We could do what we wanted. And that's what we did. And to your point, Dana, the dollar collapsed. Gold shot from $35 up to $850.
Right.
And it took interest rates all the way up in the low 20s in the early 80s to break the back of that first collapse of the dollar. And so we did a reset. And that reset interest rates here created a bid on the dollar for that yield. People would take the risk. And for 40 years since, we've been in systematic reduction of interest rates to where we hit the zero bound a few years ago and have been bouncing on the bottom ever since. Now we're printing money hand over fist. And so and my thesis, and it's just my opinion, and Dan, you can chime in a minute, I think we're at the end of the global fiat currency experiment. For only, out of all human history, we've only been since 1971 in this environment, which seems like forever if you're a young person. I mean, I was 11 years old in 1971, so I'm on the older end of the food chain, and I barely remember life before. Most people only know life in a fiat currency environment, but this is an aberration in human history. And if we revert back to the mean, which is normally what happens, then this experiment is going to come to an end. And I personally think we're near the tail end of that experiment, because zero interest rates and the fact that we have to print trillions of dollars and our economic system is so fragile are all signs of those times. I think people need to come back to a core understanding why we're doing this series of what money really is and the role it has in their portfolio, and especially in hedging the potential, if not probable, collapse of the fiat currency system. Right now, as we're sitting in July 2020, gold is priced in terms of paper money is at all times highs in every single currency except one, and that's the US dollar, and it's flirting with those highs right now. Right. So that tells me that the currencies are failing. And to your point earlier, central banks have been loading up on gold. Well, if you think about who's the biggest insiders of currencies, the people that issue them. And what are they doing? If you're going to follow insider trading, kind of follow the big dogs, they're loading up on gold. So Dana?
Yeah, if you put it into perspective, for most of man's history, gold was money. From 1850 to 1933, it was valued at $20.67 an ounce. Then we took all the gold out of the currency and collected it, as you said, into bars in Fort Knox. 2 years later, it was $35 an ounce. That's where it was fixed from 1935 until 1968, while we were on the dollar standard and the dollar was backed by gold. Then it went to $41 an ounce. That's when Nixon took us off the gold standard. And we had another reset in the late 70s. Through most of the 80s and 90s, gold was $350 an ounce, 10 times higher. Now, with the explosion of fiat currency in the 21st century, gold is reset again. It's not $350 or $400 an ounce. It's $1,200 or $1,500 or approaching $1,800 right now. So over this time, the dollar has lost this value to gold. It's not that gold's going up as much as the dollar is going down. Now, you said earlier, the reason we can have so much debt is because foreigners buy our bonds, right? And China and Japan own about half of our outstanding bonds, and they help to support and finance our debt. Well, they do that because they trust us to be economically sound. But when we go into a situation like we're going into now, where our debt is exploding from $1 trillion a year in deficits to a $23 trillion deficit to $4 trillion a year to $27 trillion in 1 year, I mean, it's exploding right now. The full faith and credit of the United States is starting to be questioned, and that will put the dollar into play, so to speak. And the Chinese certainly want to challenge it. The Russians have sold all of their US treasuries over the last year. They bought gold with some of that money. And the fact that we have printing money like crazy with no interest on it shows you how low the value of it really is and how much is needed to protect a fragile system. I mean, you're right, this is perilously close to a fracture or a real break.
Yeah, it's going to be another reset. And
right.
resets happen. It's not the end of the world, but it can be the end of your world if you're not prepared for it. That's why we're doing the Crisis Investing webinar series. It's why we did Future of Money and Wealth 2 years ago. It's why we're doing this right now, because I just know I talk to lots and lots of people. I see the emails come in from our listeners. People are out there working hard, taking risks, trying to accumulate dollars, and they just don't understand. I mean, if you go to the Federal Reserve, St. Louis Federal Reserve, and you can pull up all kinds of charts and graphs. This is Federal Reserve data, and you look up the purchasing power of the dollar. In fact, I'll put the graph down below and a link to where you can go look at it. You can see we've got a 107-year history from 1913 to 2020 of the dollar basically losing value. I mean, there's sure some fluctuations up and down, but basically it's just going down. And obviously the illustration we did previously in the first segment about the quarters, and gasoline, it really illustrates that. So it's crucially important that every investor out there understand where we're at in the cycle. When you get to the end of a cycle, you have to reset. The first time the dollar collapsed, the very first time the dollar collapsed, we had to confiscate everybody's gold. We did that in 1933. The next time the dollar collapsed, we took all the silver, and that happened in 1964. The next time the dollar collapsed, we had to default on the global gold standard in 1971. Well, guess what? It's happening again. And it's happening again, this time worldwide, because for 40 years, we've been able to pass the baton out among all these other countries. And Dana, you mentioned that other countries were willing to play because they thought that we had the economy. They thought we had the, full faith and credit, if you will. And that became called into question because some of the fixes from 1971 gave away our labor. We took our manufacturing base and exported it to China in order to import cheap labor to hide the fact that we had inflation, and our prices should have been a lot higher based on labor. But to hide that, we exported our labor. Now that's finally coming home to roost. And right. If we don't fix that, and there's a question about whether we can or not before the currency falls. And right now, all the pressure in this COVID-19 crisis is landing on the dollar. Depending on when you're watching this, we'll see how much damage it does to the dollar and if the dollar can survive. But China came to the United States in 2010 or 2009, after we printed all the money for the 2008 financial crisis, said, guys, we got a lot of money invested in dollars. You better take care of it. And this is all chronicled in the Real Asset Investing Report. And then they immediately went to work. Now, I want to say one more thing, Dana, and then maybe you remember this history, maybe you don't. But I think the history, the context is so very, very important. In 1971, the European countries realized that the dollar as a reserve currency, the Americans had betrayed their trust, and they went to work on creating the euro as an alternative. And they knew they had to unite to do it, but it was like herding cats. So it took them from 1971 to 1999 to finally release the euro. And as soon as they did it, Saddam Hussein came out and said, hey, let's denominate oil in euros and not dollars, which would take a big amount of demand for dollars out of the system and be a real threat to the value of the dollar. Of course, it didn't end well for Saddam Hussein. And I'm not saying that's why it happened, but maybe it's just a big coincidence, but it did. And so that threat went away for a little while. And then we got back to business as usual, and we had the big dust up that led to 2008. And the rise of China happened a lot between 2000, from 2000 on, China really grew. Well, ultimately, China, after 2008, came and said, hey, now we're going to lead the charge to de-dollarization. But China's harder to deal with than Saddam Hussein was. And so it's no surprise to me when you understand what's going on with the dollar, why we're at odds with China. I'm not saying we shouldn't be at odds with China for a lot of other reasons. I'm not that smart, but it's just not surprising to me that we are. And it's not surprising to me that one of the areas they perceived, I think, to be a weakness of ours is our currency. And because each and every one of us watching this earn money, spend money, borrowing money, denominate all money, currency, dollars, if they succeed, and they're trying, folks, if they succeed in dethroning the dollar, it isn't just a subtle shift. We're going through a subtle devaluation. It is an off the cliff, complete change. And one of the only ways that I'm aware of, and I'm looking for other ideas. So if you're out there watching and you go, hey, I got an idea, I want to know. But one of the only ways I know to insulate yourself from that happening is to have a portion of your liquid wealth, your savings in real money, precious metals, versus only in dollars, especially dollars in the bank. Dana?
Yeah, I'd like to add a couple bigger picture comments. Most people today don't realize that through our history and until the mid 80s, the US was the biggest creditor nation in the world. We had a balance that was positive on our books and we loaned money everywhere. Since then, we went into deficit spending in the 80s. Now we're the biggest debtor nation in the world with more debt than anyone. Now, the Chinese want the yuan to replace or go in tandem with the dollar as the world's reserve currency, but their economy isn't transparent enough or big enough yet to really challenge us today. But as you've said many times, they're working on everything to do that, and they will try very hard to do that. And one of the ways that they're going to make this challenge is by perhaps potentially backing the yuan partially with gold. The U.S. has 8,000 tons of gold in Fort Knox, which
allegedly,
is right? And we are estimated that the Chinese today, allegedly, today the Chinese, we suspect, have anywhere from 12,500 tons to 15,000 tons of gold, maybe 20,000 tons of gold.
And their population has a lot more gold than our population does, and they're a communist nation, which means their population's possessions belong to the state.
Right. So it's possible that they already have more than double the amount of gold that we have allegedly in Fort Knox. And if they decide to bring the yuan out as a challenge to the dollar, they may partially back it with gold. They may a fraction, maybe 10% or something, but it's entirely possible because that will help them get credibility that their marketplace doesn't quite offer them yet. So you're right. This is a subtle challenge right now for the dollar. But if we get a reset, it's going to be a big one. And anyone that's fully invested in dollars will take a 10, 20, 30, or 40% haircut overnight. And that will devastate most Americans. Most people won't even see it coming.
Yeah, they don't even see it coming. And there's other things in the system, counterparty risk and things we could talk about. But we're out of time for this segment. It was a long one, but I think it was a good one because these first two segments are really about setting the context to understand why, as an investor, it's really important that you take a hard look at precious metals and incorporating them into your portfolio. But don't look at them as an investment. You need to look at them as a way to protect yourself from the possibility, maybe even the probability of a currency collapse or continued accelerated deceleration or devaluation of the currency. And so we'll get more into the specifics of metals and how silver works, especially because silver is a really uniquely positioned metal as we're doing this in July of 2020. And I think that's probably going to remain the case for the near future. But we're out of time for today. So we're going to come back and the next section, we're going to be talking about silver's split personality and understanding why it isn't exactly the same as gold, but it really does have its own unique attributes. And for you to understand silver, you do have to understand gold a little bit, but you have to understand silver in its own right. So we'll cover that next time. Dana, thanks so much for your time today.
Thank you, Russ. Appreciate it.
Hey, thanks for watching our silver investing series videos. We hope you're getting a lot out of them. Before you go, 3 things. Number 1, subscribe. When you subscribe, you build up our subscription base, and that helps us reach more people. But even more important, it helps us attract great guests and subject matter experts to share their ideas and information with you. Number 2, click that notification bell to make sure that when we do post a new video on this hot topic, you're notified right away. And number 3, share. Please share this information with friends, help them get on board this bus, help them protect and preserve their wealth to take advantage of what's going on in the world today. All right, thanks so much, and we'll see you in the next video.